Okay, this week's markets outlook. So last week we saw equities rebound while the twos took a slight hit. Nevertheless, we're still very elevated on the US 2-year, but we did see a bit of a hit due to, well, essentially FOMC was on the more hawkish side. However, we saw a dovish reaction function due to the markets being that they were too optimistic on the hawkish bets. So that basically the market was over leveraged on the more hawkish side, which is why we then saw a bit of an unwinding in the short end. Regarding the Middle East, the market open will be key since I believe it was last night or this morning. We were told that Trump has paused Iran strikes for a potential deal. However, we've heard this loads of times before and shouldn't be surprised if they go back to strikes next week because we know how often it just flips from one narrative to another. So yeah, all eyes are going to be on market open, specifically on yields and US oil. So if we get de-escalation and falling yields, this supports an unwind of the carry trade, so we'll see probably the Swiss franc gain some strength and vice versa. So if we see escalation, we'll see the opposite. We'll continue to see the carry trades play out. So yeah, moving on to the calendar. So on Monday we have ISM manufacturing PMI out of the US, which is actually forecasted to come in above the previous reading at 54, so expansive, which is obviously going to support short end yields. Tuesday we then have jolts and some labour market data out of New Zealand. That's kind of it on the Tuesday. Wednesday we have services PMI out of the US. I believe that's S&P. Thursday we have unemployment out of Switzerland, PMIs out of the UK, and that's kind of it. And then on Friday we have the big NFP print, as well as obviously the labour market print out of Canada, and then I believe that's it. Oh, PMI, CAD PMI at 3 p.m. So yeah, that's essentially the main events I'm going to be looking at next week. Now let's get into the currencies. Okay, starting on the dollar. So we are bullish on the dollar. Last week we had FOMC and PCE on Friday, which saw some profit taking on the dollar, but not a change in the trend, in my opinion. Going into FOMC, the markets had a 30% chance of a rate hike, so when we got the rate hold, that obviously saw those positions unwind. And then also the yen intervention at the end of the week is also going to make the move look a lot more exaggerated on the DXY, just due to the individual currency weightings. Obviously the DXY is there's components in the DXY. It's not just how strong is the dollar, it's how strong is the dollar against the yen, the euro, the pound, etc. And obviously because the yen is one of those components and we've had this intervention, it's going to make the DXY look a lot weaker than it actually is. So yeah, that's something to keep in mind. We're still seeing the conflict in the Middle East support US oil and the twos. We'll have to wait for market open to see if that's still the case. And with the US having a relatively elevated base rate, the dollar is still appealing from a carry trade standpoint. I believe JP Morgan mentioned that actually, which we'll go over. So yeah, regarding data next week, we have ISM PMIs as well as NFP on Friday, which are all forecasted as a stronger print, which reinforces the stronger dollar narrative. So an overly hawkish Fed. However, the remaining trend of the dollar upside should continue this week. So to sum everything up, I think last week we saw some profit taking and unwinding in expectations of an overly hawkish Fed. However, the remaining trend of dollar upside should continue this week. And then if we look at the institutions, we'll be able to see that. Starting off with Refinitiv, they are long on the US dollar. JP Morgan, long on the dollar versus the lower yield basket. And HSBC as well, I believe, if we can find them. Yeah, they're short GU and EU, so they're long on the dollar as well. So yeah, those are some good institutions that agree with basically the upside dollar thesis. And yeah, let's go into the pound. So we remain bullish on the pound again this week, but against the lower yielders. So obviously with oil on the rise, we should continue to see short end gilts supported, and with yields remaining elevated and equities bouncing back, the carry appeal from the sterling remains one of the main factors supporting further pound appreciation this week. Upside on specific pairs makes sense, such as G-Swiss. Institutionally, I believe they're actually quite divided. So if you look here, you'll be able to see that, is it JP? Who was it? ANZ? Yeah, ANZ are bullish on the pound against the dollar, whereas HSBC, as we saw, are short, and Barclays as well. are short on the pound. So yeah, quite divided. I think it's all just going to be yield related and carry dominated because there's not a lot of UK news this week. So yeah, that is the pound. Moving on to the euro. So pretty similar to the pound, we are bullish on the euro but against the low yielders. So exact same story as the pound. With both economies being extremely reactive to energy prices, we are seeing the short end track US oil prices extremely closely at the moment, which is supporting the euro on the majority of crosses, such as Euro Swiss for instance. Institutionally, I believe Refinitiv are short on the euro, but Nomura, if we can find them, are long. Yeah, so as you can see here, Nomura are long on the euro on select crosses. So they're like euro pound upside, they're like euro UD and euro CAD. I agree with euro pound to some extent. Euro UD, I do see that as well. Euro CAD, I just want to leave it, to be honest. So yeah, that's the euro. So we are bullish on the AUD, however on specific crosses. So obviously last week we saw equities recover, as well as the dollar take a hit from FOMC, which helped push the AUD higher on the majority of crosses. However, the short end got hit due to the softer data, which is going to hurt the AUD on a rate differential cross, essentially. With the Chinese yuan continuing to strengthen, I do think we can continue to see some AUD strength on specific crosses, such as AUD Swiss. Institutionally, as we saw, Nomura are short on the AUD against the euro. However, I wouldn't make that comment from Nomura there make you just completely ignore the AUD. I still think it's a very good currency to be looking at this week, especially if equities continue to rebound off the open given the news that came out last night. New Zealand dollar. Yeah, we are bullish on the New Zealand dollar, similar story to the AED, but essentially stronger Chinese yuan and rate differentials are both supporting the New Zealand dollar. However, at the moment I'd only be looking at NZD Swiss. We're going to leave the yen because essentially intervention has clearly begun, so you can either play the risky game of guessing intervention or fading intervention, which I just don't want any part in personally. So yeah, moving on to the Swiss. So yeah, same as last week. With the carry trades back on the cards, we can expect to see Swiss franc weakness across the board, notably against the higher yielders such as the AED, pound and dollar. Institutionally, I believe it's Credit Agricole. Credit Agricole remain bearish on the Swiss franc. However, JP Morgan are bullish, if I'm not mistaken. Maybe I'm talking rubbish. I think I'm talking rubbish. Yeah. JP Morgan Credit Agricole remain bearish on the Swiss franc, so yeah, we agree. It's basically just all yield driven at the moment. Super easy to track, super easy to play at the moment against the higher yielders. So yeah, that is the currencies. Now let's go into the actual technicals. So starting with the dollar, we actually caught a nice position last week. This is what we put in the outlook, and I mean it was a sniper entry. Literally tagged us in for like a 1 to 2.5, and obviously we had FOMC. So yeah, dollar, I'm looking for kind of a bounce off the 99.5. That's the main level I'm looking at. We go on to dollar Swiss. We had a bounce from the level we mentioned last week as well. I think we're going to kind of fade it a bit and come down a bit lower, bounce off from this level. If not, we'll probably take out those equal lows, and then it's kind of a key level game, maybe the 0.8. But yeah, that's what I'm looking at on dollar Swiss. G Swiss, this level here seems quite nice, 108.5 targeting the monthly high. Euro Swiss, similar playbook, looking for it there. I mean, every cross is Swiss cross this week, which is why I'm going to take it slow, because you don't want to, number one, over leverage. And you don't want to fully commit into one narrative. But CAD Swiss, AED Swiss, GU actually as well, I'm looking for downside, but not at the moment. I think especially after the news that came out this morning, we will probably gap up off the open, probably gap up here, then we'll get a reaction from there. That's what I'm kind of looking at. AED dollar, exact same thesis. I think we're going to gap up, have a reaction from there, and then this will decide whether we continue to go higher or lower. I believe that's everything. Oh no, Euro UD. I think upside does make sense. I think if we do get a gap higher, makes sense for rate differential reasons, and there's a lovely monthly high up here, which I think would be lovely to take out. So yeah, that's your AUD. I believe that's everything. Yeah, that is everything. I mean, I'm not sure, was this last week's outlook we had this level marked out? I think it was. I mean, to the pip. So if you caught some, I didn't take any of these equity longs. I didn't take this, but if you did, that's like a nice 1 to 3 right there, just from these key levels. Yeah, it's going to be interesting to see if we get a continuation to the downside this week, or if this kind of marks a new trend back up to the upside. So yeah, those are the technicals and the fundamentals for this week. If anything changes, I'll drop a comment, but market open is going to be the key decipher on whether we switch narratives for this week. So yeah, catch you in the next outlook.